Hey everyone. So I wanted to expand on the POI selection video we made earlier. Some of the members were asking what else they can do to find higher end POIs basically. So in the last video we covered flip zones, if it created a new substructure or structure. I think we covered momentum. And ultimately, we covered pricing and if the inducement was intact or not. So we have this little tool called the fixed range volume profile. So this is a, I'm just going to delete that one. This is a custom setting. One of the group members actually sent to me, Ryan. So this is a setting he uses. And this is, I like this setting better if I'm pulling it across the chart and looking at a lot of POIs. If I'm kind of in a tighter zone, I go back to the stock settings, and the stock settings are just bigger bars. So they're not as fine tuned, but for an area that's congested, I found it works better. At least for me, it does. So there's a couple ways of looking at this. The red line is obviously your highest volume. And by the way, you want to use this on an Oanda chart. Forex.com is the most accurate, but it doesn't allow volume tools. If you're using FXCM, don't be. They've just steered me around too many times. So let's just look at this particular example here. So we get a demand here. And I think we can pull that a little better if we were to include the candle. So you got a reaction point here, and if you really want to get precise about it, I would say it's probably the sell to buy wicks are the supply. So what you're gonna find a lot of times is a lot of your flip zones will have volume behind them, and a lot of times the areas that have more volume, they'll be protected to some extent. So if we look at this, down here is a low volume area, obviously. Nothing down here is expected to hold. Anywhere you see a spike, it doesn't have to have a red line, could be a valid POI. So even in here, even if the POI doesn't hold, it may you may get a pretty good reaction from it. And obviously we always want the POI to show a form of liquidation. So if you look here, up top, the one wick went above the other, and then the candle got engulfed, so that's always a good sign. You drop some inducement underneath it. If you want to count this little doji as some sort of inducement, it's not the greatest thing. Like, I prefer to see pullbacks like this closer to POI, but it is inducement. I will count it as inducement. What you're going to notice though is volume spikes up here, so this makes this a valid POI. You got another volume spike area here, which also happens to be the flip zone. And a lot of times what you're going to find is these flip zones react back and forth, and if you just continue to pull them across, sometimes that'll even give you a POI or a reaction. So let's just pull another one here. So if we pull another supply here, you do get some kind of interaction here. Maybe that one's not the best example. What I was gonna try to find here was the areas that cause the flips. So a lot of times you're gonna find these areas that cause the flips, they do get revisited over and over and over. So our flip came from something in here, the move originated. You can see that you did come back to this. Now, if we just check the volume profile of this, so your spike's kind of down here. Probably even. Hold on. Let's actually delete that. Try that again. So you're gonna notice a spike in here. You're gonna notice a spike in this area. Now, what you can notice about these areas of that have spikes is a lot of the times any of the POIs you pull, and even if it's not from here, let's see if we can find another. There'll be something here on a other time frame. Maybe not. Alright, so this one happened to be a 1 hour POI, unfortunately. A little bigger than I like to work with, but anyway, the concept remains the same though. You have spikes here. This is a flip zone on the 15. You have a strong spike here. What I'm saying is, look how long this POI held. No, it didn't follow through, but that makes these areas valid POIs. Even though this heavily concentrated volume area didn't really hold, look at the area that did. And it goes back to what we were talking about earlier, and that is the flip zone, which we came back to. The simplest way for me to explain the higher probability POIs are your peaks and your valleys down here. So basically your extremes. Now, Euro's been in this range, and the volume tool is a little trickier to pull sometimes in a range. But today was actually a prime example. I took buys from here. I ended up closing them early because they weren't quite moving the way they were supposed to. But one of the things that I wanted to point out, and this was actually in resources, the sheet I shared with everybody, so you can kind of see where the volume spikes are. If you really look at it, you kind of have a flip zone right here. And if you look at where this flip zone is you have another volume spike there. And the other thing you're going to notice about this flip zone is it's also an inside bar. So I ended up taking these buys. Like I said, I closed them early. Didn't like the session time, and I didn't like that V-shaped reaction. It followed through quite weakly. I'm not upset about it. I closed out decent profit. My target was this supply, but whatever, that's totally fine. I did catch the sell from up here too. Anyway, what I wanted to talk about was, again, these volume spikes that you're gonna find. And these spikes of volume a lot of times are the flip zones. And it may be of some value to you guys to play around with the volume range indicator. You pretty much gotta play with it till you figure out how to use it. There's for me, I usually pull them from the impulse down to the impulse up, or from the impulse up to the impulse down, and I just kind of look at the range I'm working with. So right now we're concerned about POIs in this area. The POI that stands out to me is this area right here because it's the flip zone. The next area that would stand out to me is likely this wick. Why? Because it's got all this inducement below it. It puts us back into discount. Whether or not it gets tapped is another whole story, but what you're going to notice about this wick in here, let's actually delete this so we can see, but you can see there's a volume spike there. I really want nothing to do where the low volume is, like the low volume here. Those are the areas you want to stay out of, but find these volume spikes and find out which ones are the flip zones, which ones showed any momentum, and ultimately proper pricing. If you sit there and you pull every single POI, you're gonna probably pull way too many. So one of the ways to reduce that is try to use the volume tool and just pull the POIs that have the volume spikes. Volume spikes is showing BFI volume. If there's BFI volume there, those POIs have a higher probability of holding. If it is a flip zone, it has a higher probability of holding. If it is priced well, it is again going to have a better probability of holding. So like this here is a flip zone. I took a buy off of it. It is buying in premium. It's not my favorite thing to do. I was looking at the fact that I didn't think this was going to break through. For me, the reason I didn't hold this sell for long today was I was actually counting on it to come up to this unmitigated POI here, which it almost did, and that was the only reason I didn't hold this sell all the way down to this POI. Because to me, I thought it was going to do something along the lines of this. Obviously that didn't happen, and that's fine. But yeah, the main points I want to talk about is proper pricing. So if we're buying, we want to be, again, buying down here. If we're selling, you want to be selling somewhere in this range. So proper pricing, inducement, flip zones, and then ultimately your volume profile tool. If you pull that, hold on. Let's try that again. But anywhere there is volume spikes, and these spikes are usually something to be aware of. So if we look at this spike here, these sell to buy wicks is what stands out to me. Now, you know what the funny thing about these sell to buy wicks is, aside from the fact that there's a volume spike there? This was the reaction point and the supply that took out this demand. Let's see, 15 demand. So now this is getting a bit messy here. Let's just clear a few of these. Okay. So if we just zoom in on this again, so you had a volume spike here, and you're gonna notice these spikes come around the flip zones. Eventually, once you are able to identify the flip zones, you likely won't use that volume tool a lot. But if you have some sort of a leg that's kind of something like this, and you're not sure where price is going to come down to, you're going to want to pull your range volume tool from here to here. And what you're probably going to find is this area is going to spike, this area is going to spike, this area is going to spike. And the reason is these are your flip zones. And it usually probably had to collect some orders to push through the supply. And those are BFI protected zones. If you're looking for a buy, again, you're looking down here. Sells, you're looking up here. And you're looking to trade off these zones that have volume, which will usually be flip zones. If they take liquidity, that's always better. Any kind of liquidity that it takes, any kind of momentum that it shows. Now, if you can't find the confluence you need on this time frame, start cycling through your time frames. Something is there somewhere, and whichever time frame makes more sense to you. Like sometimes I find a 13-minute chalk, and if I wait for the 15-minute chalk, I miss the trade. To me, that's valid. That's still higher time frame. So if you really dial in here on the 11-minute, I can tell that the move actually came from here that took out the reaction point. So this is, to me, a more precise point. And as you can see, we've already tapped it. On a 15, that's hard to see sometimes. But play with your time frames, and you're gonna find incredible things. Like for example, this candle here, the last thing we see is a bullish engulfing, and the bullish candle does not get engulfed. And I prefer to see the candle get engulfed or liquidity taken or something. Now if we look at it on the half hour, what does that show us there? Well, it shows a bearish engulfing candle. All of a sudden you have something that confirms sells a little more. And ultimately, playing with your time frames is going to be your best friend. Anything from 10 to 30 is good. Even 10 to 1 hour. Sometimes the 1 hour is cleaner. I'm not a big fan of it, but in this mess of a range that we had, I've been even with my widescreen, I found it's to see all the data, it's very squished. Whereas if I go to 1 hour and I can stretch it out, I can kind of see what it's doing. So start using your time frames to your advantage. Start locating the flip zones. Start locating the areas that have volume. Start locating the areas that are likely to hold and areas that are likely to get run. Like, we all knew this was getting run in one push. Why? If you look at the way it went down, everything's mitigated. And ultimately, this high didn't really do its job. Like, yeah, it created this move that swept this, but we didn't actually close there. To me, that's not really a strong high. You know what is a strong high, though? Is, and you might be able to see this better on the 15. This is when we were talking about market structure earlier. This is actually a strong high, and this is a low. The reason this high is strong is because this high put in this low. If you notice where the market stalled today, it was not able to close above this high. So this is a strong point to trade off. And that goes back to our last video where I told you guys, look at what the POI did. A lot of you might say this drove that and that makes this strong. I'm like, to a certain extent, you're right. And what time is this? So this is London, so you would have definitely found a short in there, and the short-term short would have played out. The reason it didn't play out is it's middle of the range. But again, this did something. It kind of drove price down lower. But if you guys remember to our market structure video, it is the highest point before the lowest point. So we expected this point to put up a bit of a fight. Like I said to you guys, I expected this, and I expected it to wick and not close. Obviously not what happened, but honestly, there is no way for me to simplify the POI selection any more than that. It's chalks, it's flips, it's where's the liquidity, where's the inducement, is there any sort of momentum? If there's no momentum on the 15-minute time frame, is there momentum showing on the 30-minute? Did it liquidate? Is it with market structure? What point is it reacting off? Like this guy here, for example, reacted off the high that put in this low. That's a valid, strong point to trade off of. Not my favorite, but it's there. It's 100% there. Whereas you start looking at other POIs, they're not as high probability. Like this, for example. People might say there's a volume spike there, and like that's great, but this didn't do anything. This did something. It flipped the zone. We had some momentum from here. This didn't do anything. This created inducement for the POI below. And if you start locating these zones and you start locating the flip zones, and the next thing you're gonna notice is this is kind of middle of the rangey. Not my favorite area to buy or sell off of, you know. It's, I know I'm probably beating this over the head and repeating it over and over, but it comes down to proper pricing, liquidity, inducement. What did the POI do? Is it a flip zone? Is it a chalk? Is it an inside bar? And can I pull the range volume profile on it? And if you start putting all these pieces together, ultimately they are going to start giving you confluences. So even the indicator that I just released to you guys. So this morning you got a divergence shown here. This is saying, let's actually show you. That's not the one we want. So let's just go to, and if you're wondering, these are all the same. They just have different names. The source code itself is completely the same. So just to talk this, so we made a high here, but if you look here, the volume didn't match what the chart did. That's a confluence that there's probably a good chance to sell. Now, if you waited for the 15-minute to show you this, you likely would have missed this confluence. Let's see when it showed up. So you didn't have it here. You didn't have it here. When does it show up? So it's already 2 candles past. You probably missed it. But let's check this out. I'll bet you it'll show up. 13-minute. We get a divergence shown here. When did that divergence show up? So now you have a... So right here, the divergence showed up 2 candles before the actual short happened. So you already knew here on the higher time frame the BFIs weren't pushing that hard. And anytime you see these lines appear, it doesn't mean you automatically jump on a buy or sell, but what it does mean is it could be a confluence for going the other direction. So here you got a blue line, we go the other way. Here you get an orange line that is divergence again. That's saying there's not much volume pushing this up. The next thing you get is a red line, which is hidden divergence, and that's showing a continuation down. Ultimately, I released these indicators to help with trades, and there's all kinds of different versions of similar indicators. This one in particular, the way we design it was to work hand in hand with the concept we teach. But again, you could have spotted this trade from the POI it was hitting. Had you cycled through your time frames, you would have noticed this divergence long before it happened. And all it's saying is price is going higher, but the volume's not matching what price is doing, which means there's not serious volume behind this move, which means this move is likely not going to continue much longer. I was hoping for this supply. It didn't do it. A little upsetting, but probably another day. But on the 12-minute, you don't get it. 11-minute, you don't get it. Oh, you do get it on 11-minute. But like I said, had you waited for the 15-minute, you would miss this. So if you take anything away from this, it's flip zones, liquidity, proper pricing, volume, and if you could spot a divergence. And a lot of times these areas get revisited. These indicators can give you confluence of future POIs. And the next thing I was going to talk about too is this gray line is the moving average line, and the moving average line gets retested quite a bit. So where the orange dot appeared, there's a good chance that order block may get retested. Doesn't always play out, but more often than not it does. So here we get a moving average test, and that's basically where the trend changed. And what you're going to notice is we return to test this area. And no, it doesn't always play out, but it does more often than you think. And if you play with your different time frames, you once again might locate other trades. So even here, so what time is this? This is just after London Open. You'd likely find a short in here. And I don't know what it is about the 50 MA and the 200 MA, but these zones get tested a lot. The 50 MA is one of the MAs the BFIs use. It's just something to consider, but this is about all I can give you guys for POIs beside everything else we went over in the course. There is no magical solution. Like, I don't know, if I pull 10 POIs here, I could probably say 3 of them are higher probability because they're flip zones and there's likely volume there. And that's as much as I can assume. I'm getting DMs from people, how do I know which POI I trade off of? I'm like, well, I don't know any more than you do. What I do know is, what did that POI do? How is it priced? Where's the liquidity? Okay, these POIs are higher probability than these ones. And most of the time I pick the right POIs, and it's a game of probabilities. I know some of the DMs I got, I think guys think that you're just going to know which POI to pull and trade off every single time, and it's going to work out. And that's not what trading is. Trading is compiling the information in front of you as it prints and create a trade plan to the best of your abilities. If you can be right half the time and manage correctly, you'll do great. And that'll only come with experience. That'll only come with putting this stuff to the test. I think I've repeated myself enough in this, but I'm going to leave you guys with this. Play with everything I showed you in this video. Aside from this and the last POI selection video, I think it's just going to come down to you guys putting in some back testing hours and testing these things and training your eyes for it. The next thing I'm going to suggest too, and not enough people in the community are doing these, are case studies. Make them, train your brain to see it in the moment, and post them and let other members comment on them. And you'd be surprised how many people are sitting looking at your charts and learning off of it. So you're not the only one learning off of it. I can't stress this stuff enough, guys. You have to program your brain to see this stuff in the moment, and the way you do it is backtest and just practice case studies. And I promise you, if you keep repeating that and you keep posting your charts, you keep asking questions, eventually you're going to come in one day and you're just going to sit there and your brain's just going to be like, oh, that's a flip zone. And you'll just automatically identify it without even thinking. Like, I used to struggle finding flip zones a long time ago, and now I just look at a chart and I'm like, that's a flip zone, that's a flip zone. I rarely pull the volume tool. It's just, I can see them now, but the reason I can see them now is because I put in the chart work and the back testing before. So that's my biggest advice to everybody. I hope this makes some sense to you all. I hope it helps you all. I'm more than happy to make any more content that would help you guys. I just don't know if there's much more we can say about the POI selection. What I can say though is I'm more than happy to look at your guys' charts and tell you what you're doing right and what you're doing wrong. And I think the learning curve of it is where you guys can really push forward and start identifying these POIs. And also, don't forget, you're in a community. Talk to other members. Some of you are month 1, some of you are month 12. There's different experience levels here, and you can learn something from everybody. So just go into it with a positive attitude, and yeah, I hope this video helps you guys, and I will see you guys in the next video.